Assalamualaikum everyone. My name is Musab Iqbal and I lead the Real Estate Investment Trust Fund Department at JS Investments as Senior Vice President. Good morning and thank you for joining us today. I would like to begin by introducing the JS Hotel REIT Fund, which is the central subject of our discussion today. This is a professionally managed Shariah-compliant REIT structured under the SECP REIT Regulation 2022, designed to give investors more transparent and regulated access to Pakistan's hospitality sector. The underlying asset of this REIT is a four-star multinational branded hotel to be developed in Hyderabad, a project that carries not only financial potential but also strategic importance in reshaping the hospitality landscape of Sindh outside Karachi. Hyderabad is the second largest city in Sindh and one of the fastest growing urban centers in Pakistan. While Karachi often dominates conversations on hospitality and real estate, Hyderabad presents a very distinctive market that combines rising demand with severely constrained supply. This imbalance between the two is at the very core of why the JS Hotel REIT represents such a compelling opportunity. The primary demand driver for hospitality in Hyderabad is corporate and institutional travel. Over 90% of city's hotel clientele consists of business travelers, project-based professionals, consultants, pharmaceuticals, company, and government officials. This reflects Hyderabad's growing role as a commercial and administrative hub. Large-scale infrastructure developments such as Karachi, Hyderabad, Sakkar motorway, along with expanding multinational businesses in Hyderabad and the presence of key government and private institutions are steadily increasing the volume of visitors requiring a reliable accommodation. Hyderabad is also strategically located, positioned along the National Highway Corridor. It functions as a critical link between Karachi and interior regions of Sindh. This creates consistent demand for transit stays, especially from corporate logistic providers, banking institutions, and service sector professionals traveling between Karachi, Hyderabad, and other cities in the province. Additionally, Hyderabad is home to leading healthcare institutions, universities in Jamshoro, which is approximately 25 minutes away, which attracts visiting faculty, researchers, patients, and families, all of whom contribute to hospitality demand. Perhaps most significantly, Hyderabad business environment is diversifying. Traditional sectors such as textile and trade remain important, but new drivers such as education, health, agribusiness, and technology-linked services are expanding. With every new investment, public-private partnership, or institutional expansion, there is a corresponding rise in business-related travel. This demand is not episodic, it is recurring, predictable, and anchored in the long-term growth of the city. The province, Sindh, is also hit with extreme climate change factors. Some recent floods in Sindh have prompted international organizations such as World Food Programme and the United Nations to establish presence in Hyderabad. This has led to increased demand for accommodation, contributing to higher hotel occupancy throughout the year. Now let us deep dive into the supply side constraint. Now, against this backdrop of growing demand, the supply of quality hospitality infrastructure in Hyderabad remains limited. Existing hotels are dominated by independent operators, many of whom provide basic accommodation but fall short in terms of modern facilities and standardized service. The most pronounced gap lies in amenities and hospitality infrastructure. Most hotels in Hyderabad do not offer facilities such as gyms, spas, swimming pool, disability access, adequate security measures, airport transfers, adequate parking, or even air-conditioned elevators, all of which are considered standard by today's corporate and international travelers in Pakistan. Basic services like concierge support, this creates a significant disconnect between what travelers expect and what is available. Compounding this is the absence of internationally branded or globally recognized hotels. According to research conducted by JSIL, the only property in Hyderabad that offers a semblance of upscale service is Hotel Indus, and even that is limited to select categories of rooms. Recently, probably 2 months ago, PC Legacy has opened in Hyderabad. Compounding this is the absence of internationally branded or globally recognized hotels. According to research conducted by JSIL, the only property in Hyderabad that offers a semblance of upscale service is Hotel Indus, and even that is limited to select categories of room. Business travelers often settle for suboptimal stays, despite being willing to pay a premium for reliability, safety, and service quality. Another critical supply issue is the lack of choice. Most hotels are concentrated in the central parts of Hyderabad, particularly the older districts which are congested due to unregulated urban sprawl. Moreover, traffic congestion in these areas makes commuting inefficient, further diminishing the overall experience. No diversity across hotel types, from branded mid-scale to upscale, the city fails to cater to the full spectrum of hospitality demand. PC or Pearl Continental has recently launched themselves in Hyderabad with four-star tier brand calling PC Legacy, which again endorses our research of high average daily room rents absorption. However, limited supply of 40 rooms will not be able to accommodate the growing demand of second largest city in Sindh. Now let's look into the market gap and the investment case. When comparing Hyderabad to Karachi, the gap becomes even clearer. Karachi, as the provincial capital, is home to numerous international hotel brands catering to corporate and leisure segments alike. Hyderabad, despite being the second largest city in Sindh, has virtually no representation of such brands or standardized hospitality offerings. The contrast is striking. Karachi has achieved a certain level of hospitality maturity, while Hyderabad remains underdeveloped, leaving pent up demand underserved. This structural mismatch creates a unique investment case. In cities like Hyderabad, where demand is strong, recurring, and underpinned by corporate and institutional activity, the introduction of a professionally managed, brand backed hospitality asset can rapidly capture market share. The lack of competition further strengthens the case as first movers have the ability to set new benchmarks and establish long term dominance. In short, Hyderabad presents a market where demand outstrips supply, quality is inconsistent, and corporate requirements are not being met. These conditions form the heart of why the JS Hotel REIT's underlying project is so strategically positioned to succeed. This now takes me to discuss in detail about JS Hotel REIT, a Sharia compliant hybrid fund structure and its performance. The JS Hotel REIT represents a first in Pakistan's capital market landscape. It is the country's inaugural REIT fund to introduce a hotel as an asset class while also being structured as a Sharia-compliant investment vehicle. This dual distinction broadens the accessibility of the fund, allowing investors to participate in a regulated, faith-aligned structure that captures growth in an under-penetrated sector. The fund has been structured as a hybrid REIT, combining both a developmental component and a rental component. This creates a distinct two-phase investment profile. At its core, the fund size is up to PKR 7.5 billion. Of this, 3 billion has already been committed by the strategic investor, demonstrating strong backing and confidence in the project. JS Investments, acting as an RMC or the REIT fund management company, is mandated to raise approximately 4.5 billion from accredited investors as defined under SECP REIT regulation. In the development phase, investor capital is deployed into the construction of the hotel asset. This provides exposure to the capital appreciation potential of real estate in Hyderabad, a tier 2 city where valuations remain below the scale of economic activity and urban expansion. Unlike Karachi, Lahore, and Islamabad, which are tier 1 cities, Hyderabad lacks international standard hospitality supply despite sustained corporate demand. This supply-demand imbalance offers first-mover projects, particularly those backed by global brands, a meaningful opportunity to capture value and generate superior returns. Following completion of development stage, the fund transitions into the rental income phase. Preliminary projection indicate the potential for double-digit annual yields given the city's concentrated demand base and the absence of comparable assets. This income profile complements the earlier capital appreciation, creating a blended return model rarely available in the local market. The hybrid design of the JS Hotel REIT balances the risk-return spectrum. During the early period, returns are anchored in the development-led gains, In later year, stabilized income provides predictable recurring cash flows. This dual exposure enhances portfolio resilience, offering investors both upside potential and long-term stability within a regulated and transparent framework. Taken together, JS Hotel REIT is more than a hospitality development. It is the first Sharia-compliant hospitality REIT in Pakistan and a product designed to capture both growth and income in a market where structural gap persists. By addressing unmet demand in Hyderabad hospitality sector, the fund positioned itself as a credible vehicle for a long-term value creation. Now I would like to get into project level details. At the heart of the JS Hotel REIT is the development of a four-star internationally branded hotel, the first of its kind in Hyderabad. The project is designed as a basement plus ground plus 8 floor structure, comprising a total of 139 keys. This configuration has been carefully planned to achieve operational efficiency, ensuring sufficient scale to capture market demand while maintaining an intimate, well-managed guest experience. I'm pleased to update you on the progress of development, which is advancing at a full momentum. The work on the basement raft and pillar is now nearing completion. As you can see in the pictures, the project is transitioning towards the ground level and vertical construction. This stage typically progresses at a faster pace compared to basement development, so we expect to see the structure rise more visibly in the coming period. What truly sets apart this project is the combination of a globally recognized hospitality brand and the proven record of its developer, Gohar Group of Companies. On the hospitality side, the alignment with an international four-star brand brings a powerful value proposition. It ensures the property will operate under globally benchmarked standards of service, quality, and consistency. Through established reservation systems, international loyalty programs, and brand-backed assurance, the hotel is positioned to attract multinational corporations, NGOs, pharmaceutical companies, local large-scale manufacturing companies, development agencies, etc., that require reliable accommodation and event facilities in Hyderabad. The brand itself becomes both a quality signal and a demand generator, instantly connecting the property to a global traveler base. On the development side, Gohar Group of Companies provide the execution capability and credibility necessary to deliver the project on time and to standard. With experience across 21 projects, of which 10 have already been delivered, Gohar Group of Company has built a respected reputation for timely delivery and strong project execution. Their involvement provides investors with the assurance that physical development will match the ambition of the brand partnership. Together, the hospitality brand and the developer's expertise create a unique convergence of global service excellence and local execution capability, setting this project on a foundation of both credibility and competitive differentiation. From an infrastructure perspective, the hotel is designed not just to meet demand but to redefine hospitality standards in Hyderabad city. It introduces a suite of modern business amenities, including multiple meeting rooms, conference halls, event spaces tailored for corporate gatherings, official delegation, and NGO activities. These facilities directly address one of Hyderabad's most significant market gaps: the absence of reliable professional venues for meeting and events. Beyond corporate needs, the property also emphasizes wellness and lifestyle features as a swimming pool, a fully equipped gym, wellness service to create a complete hospitality environment. For the corporate traveler who may be stationed in Hyderabad for extended period, these amenities provide the comfort, balance, and productivity environment that global business standards now demand. Now, with what have been discussed, hotel now becomes a destination asset, uniquely positioned Hyderabad's underserved corporate demand base while capturing ancillary demand from social and development sector activity. For investors, this combination represents a compelling value proposition. The global brand affiliation ensures premium pricing power and stable occupancy, while the property's scale and comprehensive service offering make it a long-term resilient asset in a city with rising demand but limited supply. Coupled with REIT's hybrid structure, where capital gains from development are complemented by long-term rental yields, the Hyderabad hotel stands as a cornerstone investment within JS Hotel REIT, delivering sustainable returns and brand-backed asset value. Like any real estate investments, there are risks associated with it that needs to be addressed clearly and proactively. And so the first one is the hospitality performance can fluctuate with seasonality and local demand shifts or major events. Number two, construction cost escalation is another factor. Prices of steel, cement, and imported material can rise, putting pressure on feasibility and timelines. Third, property title risk is always a concern in emerging markets. Any ownership disputes or unclear title can impact transferability into the REIT. To mitigate this, two separate legal due diligence reports have been completed, confirming the title is clean. And public notices have also been issued with no objection received to date. JS Hotel REIT, although, have utilized the mitigating steps required to address all these risks. Finally, at the asset level, there is a liquidity risk exists. In weak market conditions, repositioning or selling the hotel may be difficult. The REIT structure addresses this by focusing on stable income rather than speculative resale, while the RMC retains flexibility to adapt usage strategies if market dynamics change. This brings us to the conclusion of this webinar. Now, as we bring this discussion to a close, I would like to leave you with a perspective that captures the essence of what JS Hotel REIT represents. This is not simply about constructing another hotel. It is about introducing a globally recognized four-star brand into Hyderabad, a brand whose credibility, standards, and reputation instantly elevate city's hospitality landscape. By combining the strength of a hybrid REIT structure with the trust of an international brand, we are delivering more than just a property, we are unlocking a unique investment opportunity. For investors, this translates into the potential for sustainable double-digit annual yields once stabilized, coupled with meaningful capital appreciation during the development and ramp-up phases. For Hyderabad, it creates a hospitality ecosystem that meets international expectation and attracts multinational corporations, domestic corporates, and leisure travelers who until now lacked such an option. In short, JS Hotel REIT is a story of value creation, value for investors, value for the local economy, and value for the city of Hyderabad through a brand that brings global standards to a market ready for transformation. This is not just an investment in real estate, this is an investment in future growth, resilience, and credibility. While we move on now to Q&A session, we would like to take a 1-minute break and then we would respond to your questions. Thank you. So we'll look into the Q&As and I think I've got a bit of questions over here. So I'll try to go one by one accordingly. Number one, this is to how to invest in JS Hotel REIT. So again, the webinar is not intended to provide any investment advice. However, if you have a personal investment related question, you can definitely email us at info@jsil.com or REIT@jsil.com along with our number that is available on our website. Then I have another question. I think this one's very interesting. So considering that there is need for rooms, hotel rooms that even project under JS Hotel REIT would not be able to cater the unmet demand. Are there building expansion plan in JS Hotel REIT? As of right now, we do not have any, as of yet, we do not have any expansion plan. However, just to give you an understanding of how hotel business work is that hoteliers do work under dynamic pricing. So that means that once they reach an optimal occupancy level, they tend to increase prices. So they strategically hold relevant rooms and amenities likewise, and then increase those prices and sell it out. This allows them to, enjoy and basically they have the opportunity to increase the price. So is it on PSX? No, it's a closed-end fund right now, only for accredited investors. How do you see REITs fitting into a diversified investment portfolio in Pakistan, especially compared to mutual funds and equities? Again, comparing it to, it's definitely an alternative investment side apart from equities, fixed income. Why? Because REITs in itself are more are comparatively or traditionally they are less volatile because they have projected agreements already in place regarding rents and incomes. So they are typically considered to be less volatile as compared to equities. Obviously, PIBs remains the most more safer investment option, but REITs are also generally considered less volatile. Again, what key challenges do Pakistani REITs face in attracting retail investors, and how can financial literacy or marketing strategies help overcome these? Well, obviously, lack of knowledge and lack of available information generally becomes a hurdle, and these webinars are definitely there talking about and making our investors more informed on what's in the market, how do they actually perform, some key metrics that are utilized to understand how certain fund analysis may work. So I've already answered regarding how to invest in JS Hotel REIT. Again, there's so many questions regarding how can we purchase REITs unit. Again, that has already been answered, as this webinar is not for investment advice. This is merely about sharing the information of JS Hotel REIT. If anyone have any personal question on how to invest in REIT and how they can purchase REIT unit, they can separately email us. Again, our email addresses are already mentioned. However, you can also email us at info@jsil.com and reits@jsil.com. Along with that, alternatively, you can call us on numbers already mentioned on our websites. So where it is actually situated. So the project under the REIT fund is located in Hyderabad on main Hyderabad bypass. Will the REIT get listed on PSX? Yes, as per the REIT regulation 2022, REITs are required to register within 3 years on transfer of real estate or financial close. What market research was done before choosing Hyderabad? What other cities were considered? Well, as part of the REIT department myself, we get to see a lot of projects coming in. And before we even make it under a fund structure, we need to understand the feasibility around it. So we at JS REITs department, we generally manage very large amount of data to be somewhere around 150 million square feet of data suite that we manage for all four different asset classes of real estate, and we try to understand based on that data set that how a specific project is going to perform in the market. All right, I think that's probably it. The questions are coming in. Again, if you have any more questions, please let us know on our email, and we look forward on entertaining them and answering them accordingly. And we hope to stay in touch. So take care and thank you for joining us on my webinar. Assalamu alaikum.